The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour on this 28th day of April. My pleasure to be here Monday through Friday. And we're looking at a remarkable day because, let me just show you this chart. This is the 10-minute chart of the E-mini. And what happens is it goes plunging. It goes plunging from 23, that's 11 o'clock last night. Suddenly, whoosh, it goes from the 2090, what was the high there? 2094.25 level. And in one 10-minute bar, it plunges down to 2074. Rallies a little bit, makes an H pattern, that lowercase h pattern, breaks the left side low. And what does it do? It hits 2070 from 94 to 0. That is huge. And the Dow futures were down sharply, E-minis down 20. And now look what's happened. Just a moment ago, we were 0-0. That means we came all the way back. And the futures just hit 20.9125. Now, at this particular point, I could have had a recycle. I'm calling it a leg F in the 10-minute. I've circled the area here. Let me just move it a little bit to the side so that you can see what we're doing there. Somewhere there should be a pullback with 2090, should test the 2087 9-period exponential moving average over the next, let's say, 3 10-minute bars. Let's see what happens. But it's spectacular to be able to come back. I've been watching this market now for 2 weeks, and the internal strength is just something to behold. Let me show you this. Actually, let me run the numbers. Here we go. The Dow is, where are we? The Dow is down 25 at 18,016. The S&P is down, it's up 1.4 at 2,098. The comp index is up 22 at 4,866. Now, this is going to be very interesting. Gold is up 9. I actually think that gold is acting Gold is acting very much like the market. Every time it gets beaten down, it just keeps coming roaring back. I'm going to explain a whole bunch of things in a moment. Let me get the numbers out of the way first. So we've got gold up 9 at 1,259. Yes, the silver is up 0.09 at 17.38. Platinum's up 13, and high-grade copper's at 221, up 25 cents. Crude oil is unched at 45.34. Now bonds are down 7/30 seconds at 162.5, and the dollar is at this point down 32 at 94.04. Now let's go into this whole market panoply of concepts, etc. And as we do that, so I don't forget, I meant to show it. I was going to show it yesterday. I was unable to do the show yesterday, but if I can get the right contract here, look at this. Remember, we made a peak C in soybeans, and my thinking was we would make a leg D. We have just done that. I didn't expect that we had done it right now because earlier on it hadn't done it. We're in leg D. Now soy is close to some kind of a reversal. Very important that you got that leg D in the Chapman wave after that instant restart, right at the turn of going into April. And this extends leg C in the weekly chart. This is spectacular. Now, commodities don't always have to go to their target lines. Sometimes they can fail in a peak C. Most of the time, stocks and ETFs and indexes do go to their Ds in the weekly chart. So let's move this away. Oh, no, I need to show the, so that was the one. Oh, a USO is the other. Remember, we were looking at it. I said, I think we can go high. I kept getting questions about, or something or other. I can't remember what it was. It was the New York hub. So I'll get that in a moment. But in the meantime, I just wanted to show that the commodities are just at a point where they could at least have a little bit of a break, a little breather, let's say. But this is very interesting. If you look at gold, You see the way gold has held this Chapman wave inside track support zone, what I call the propellant zone. It never broke that red line, and it keeps holding the 9-period exponential moving average. The stochastic is flat, which usually keeps the previous up or down arrow in check, and this is an up arrow, so it stays in check. And it also says that the stochastic, which is only at 44%, needs to climb to be able to sustain a move in gold. But my reading of this is that the weekly chart, remember I drew the rectangle in. I said the 9-period moving average is going to be very important. This week it held the 9-period moving average. Last week it held the 9-period moving average. The week before it touched it and rallied off it. The week before that, that's the week of the 8th of April, it went under it, but closed well above it. And the previous week it sat on it and then went above it. So to me, this is saying the 200-period moving average of 1267 is really a target, and gold right now is at 1258, up 8. Hey, days young, we could see anything happen, and we have seen many things happen. Now I just want to go back to the ES because there was something I want to talk about in the 120-minute chart. See this 120-minute chart on the right? You see the cup formation, and then it stalled, and then it broke to a lower low. That's 270.25, I believe. Yep, 2070.25. So we were 75 cents lower. That essentially says to me, there's the H pattern that broke below, and now you can rally to the next level of resistance, which is the 9-period moving average, broke above that. It says, yes, you might try to touch the 2094.25 level, but there's a chance that the E-mini will not hold above it before it takes another digestive phase. That's what I just wanted to talk about there in the 120-minute chart, just another technique of mine. Let's see if that's going to work. And now I'm getting out of that, and I want to show you a couple of things. Facebook had a spectacular earnings report, and it screamed to a leg D, gap up D in the daily. Did it hit a round number? No, 120.79, and it's trading 120.79. It's trading at 119.03, still outstanding, up 10. If Facebook takes out in the next 2 days the high of the 30th, peak C, 116.99 in the next 2 days, you can expect that the NASDAQ will finally take a little bit of a breather. I tell you what's been really impressive for me in this particular market. A lot of stocks have done this. Oh, wait a minute, A, B, that's not an F, sorry. I was asked about this in the den, and of course, if you in the Chapman wave, if you don't pull back your charts enough, you will misread, and I did. That's A, B. This is obviously now C, and this is D. So let me just say, okay. So it's leg D in the daily, leg D in, write it correctly. Peak C went to peak D today, leg D today in the weekly, and a leg it recycled in the monthly chart. I'm going to have to do a little work on this, but I believe that this is G/C. Most probably it's a C because Facebook has just been one of the leaders of the pack. And so that's what I wanted to go over right now. Facebook, because it's been a leader. And now let's just run these as we're going out. Let me just say that the Dow screamed back. It was the weakest link. Now it's only down 28 at 18,013, while the S&P is actually struggling now to break much above even. So this is going to be very interesting, and I'll talk to you a little later about it.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we're back. So this is what I wanted to show you. Remember this chart? I've been talking about it for a long time. It's got two cup formations with exactly to the day, well, within 1 day of an exact match. I call it the Chapman Wave left side, right side price time match. What does it do? It identifies a major top in whatever it is tradable you're looking at. And in this case, it's the Dow at 18,351, May the 20th of last year. Comes all the way down. It goes down to 15,370, was a 16% correction. And then it runs back from the 24th of August. It runs back up, and on the November the 11th, it makes another peak. I think it was a peak F in the Chapman Wave daily at 17,977, just under 18,000. I used that time to extend to the right side. And what happened was that the Dow went down to 15,450 on the 20th of January, made a little H pattern, successful higher low, and then ran all the way to the high of the 20th of April at 18,167. In this price time match, basically what should have happened was within 1, 2, 3, 4, between 4 and 6 sessions, the Dow should have plunged through the red line, this thick red line, the 20-period exponential moving average, if it was going to match the previous tops and the previous 6-day pattern. Remember, we were following a pattern 3 weeks ago. It was working perfectly, and then bam, the market moved up. That's that extension right there, which kind of matches that extension there, matches that extension there. Now, this is going to be very important. Why? Because earlier this morning when the futures were down 175, I thought, great. 1, 2, 3, 4, 5. Today's the 6th day. 1, 2, 3, 4, 5, 6, 7. So between 6 and 7 was the period back in November where the Dow started its plunge and then ran right through that 9-period exponential moving average. Everything was on track. But I've also been looking at the way the market has resolved any downward movement by doing what? Suddenly you'll get DuPont showing strength when IBM is showing weakness. It's just been this constant rotational correction all the time. And it's done that ever since the summer of 2010. There's been a rotational correction. That's one of the reasons why we tightened up the stops and the shorts very much. And we've added to the long side. And the longs have been working really well. Funnily enough, the shorts had been working very well. I think we're about to be stopped out of one in a moment. But other than that, this is very interesting. And I want to go to our next caller because this is exactly what we're talking about. Hi, Scott in Safety Harbor.
What can I say, Basil? I mean, this is Christmas every day for me. For seriously, as you know, about the last 3 or 4 months, it's just
That's
unbelievable.
Fantastic.
Unbelievable.
You're looking at what?
I am looking at now Alcoa has such a sign of strength. And by the way, I went into X yesterday when it fell back.
Yes.
I paid no attention to the articles that, there's a glut of steel, this and that. I went right back into it, and we got over $1 pop today. But I want to talk about, and POT still is right there.
It's
ready
in play,
to
right.
I'm
Correct.
looking at $20 on POT and $20 on X. That's what I base everything on.
So
But back to
U.S.
Alcoa,
Steel,
it's
right?
so strong right now.
Let me just say, U.S. Steel right now is down 1 penny. Oh, sorry, this is Alcoa. U.S. Steel was up when I looked. Right, is up $1.17. It looks like it wants to retest the previous high of 20.55. But what's really important is that the MACD and stochastic in the weekly charts, and this is what I keep fussing about. The weekly charts have been spectacular, and it would take the daily charts to really disintegrate to force the weekly charts to deteriorate to the point where you go from 96% in the stochastic, which United States Steel is right now at 96%, to go under 80%. So yes, there's a lot of strength. And Alcoa is what we want to look at.
Basil, news is part of it, as you know, and I'm a big news guy. But you can go through a simple research on Yahoo for X, for CX. Don't forget about my little CX,
Right.
And a few different of these things that I've been trading, and you can see right before, a week before they popped, they had all kinds of negative news. So then you start to wonder, who's putting out this? Go into these news organizations, if you want to call them that. They're just people in their garage probably that are putting out this stuff. They may want to buy it. That's why they're putting it down.
Yeah, you're absolutely. You never know the motives. It's almost like in politics. You never know who's behind
Absolutely.
who's
it's like
behind
potash, it had all these bad things. Well, it went back to 1691. I got into it 1695 today. It jumped up to 1824.
So Scott, let me just point a couple of things out here. I'm looking at the relationship of the SPY to the USO, which is oil, and the green. Where did it go? The green line is the SPY, which has gone in leg A, B, C. It's now in leg D in the 5-minute chart. And crude oil is doing okay, but it's nothing great. But that's the interesting thing, that crude oil didn't fall. So I think that this market is finding many, many factors that it uses as a crutch. Now, there are a couple of things that I'm looking at here, and what's going to be really important today, and I have said this to subscribers, I have no qualms about flipping from short to long if the tools demand it. And if you're looking at Alcoa, what is Alcoa telling us? It's telling us that something's going on that is really positive. Otherwise, it just couldn't be moving up like this. It can't be just that it's going to split and do a whole bunch of things. Something's going on that's really important. And Alcoa just the other day looked, when it made that peak D and dropped from the 10s, 17 area to the
institutional buying. There is one of the things that's going on, and the institutional buying is simply because these fund managers and hedge funds are going to get hell from their investors if they
have to be
thing pops. They're going to say, "Well, how much did we make?" And they don't want to say, "Well,
right." So we're looking at the 46.5 million. Yesterday was the volume in Alcoa, and today already is 10 million, and we've just barely started 2 hours into the day. Yeah, I think you're right. I do have a leg E up now in Alcoa, and it says that this extension from D to this very strong E makes for a potential high-level consolidation. At some point, that gap will be filled at 10.74, the low of yesterday. But so far, that 11.70 level, which was looking so far in the distance, is now becoming the magnet for for Alcoa in the
I
weekly
like that
chart.
terminology, Basil. I really like that. I'm going to write that down because, there's things that we don't understand, and as the Bible says, I hate to mention the Bible when talking about stocks, but, there's things that are not seen that are more real than the things that are seen. And there is some sort of magnet that pulls these things.
I think so, too. So, hey, congratulations. You're doing a fabulous job. And let me tell you something. As long as you can just keep your eye on the ball here and keep just thinking about the stocks and doing exactly what you're doing, that's the best thing you could do. Don't be dissuaded by anything else.
And sure, I could have, I was in it, as you know, back at 685, and I could have done nothing. But see, I like to play it safe. That's why I trade in and out. And I will tell you right now that there's more.
No problem. Bravo, congratulations, Scott. Thank you for calling.
Thank you. Bye-bye.
We'll be back, folks. Dow is now only down 8. S&P's up 3.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Oh, folks, we're back. So ALB is Albemarle Core. It's trading at 67.31. Z in the Den says it is a... what did he say it was? Can it go higher? That was not the question. The question was... The statement was, it does what? Lithium or something? Yeah, lithium. Okay, mine's lithium. A, B, C, D. So this is what I've got. It's got, that's not an A. Let me just review for the moment, for those of you who are not used to the Chapman Wave methodology. I'm looking at the monthly chart, and all you do is you look to the left, go as far back to the left as you can see the most obvious low bar. That's right there, and that is in 2009, March, I believe. Yep, March, where the market turned around at 1554. If you remember, that was the day we went long, March the 6th. Right at the low, we bought the diamonds and held it for about 18 months. A, B, C, D, E. That bar cannot be leg A. Why? Because you don't know it's a leg yet until you get a higher low. You have to make a V-shaped bottom before you can use that. So that's an A. But look what happened. It pulls back and restarts. It goes A, another A, B, C, and then it goes to a D. Now it's in a brand new A to B. So, okay, the question is, can it go high? And the answer is that the way the stochastic, the commodities, this is really an amazing thing. The turnaround in the commodities started off so slowly. And then when it picked up, some of these things have moved tremendously. So this is holding in a very nice range, and it's making higher highs and higher lows. Not by much, but certainly high highs and higher lows, and that's only leg B. So at 67.37, my monthly chart says 58 is major support, but my eye says that that whole area of the low of the month, 63.40, that's the monthly support level. The weekly says I'm in leg E, and the MACD is very strong. Stochastic is flattening. The on-balance volume is getting to a high. So that says support is at 63.36, but it doesn't say it's got to fail. What it says is probably it's a limited upside from here just for the moment for the next 3-5 days, maybe it's at 67.41, maybe towards the 69-ish area, 69.30, something like that. But most importantly, it says that the whole 65 area to 65 to 63.50 is going to be key support if there is a pullback. So the question was, can it go higher? And my answer is, it might just have to have a sideways consolidation at worst, but I'm going to say yes. Based on the monthly chart, the strength of the monthly chart, lithium, I don't know much about lithium. I do know that ALB, Albemarle, is looking pretty darn good, down 40 cents today. And the daily says, I'm not sure of the count, it's A, B, C. It should probably have one more pop, and then it might pull back. Yes. So it's looking very good. So what I wanted to do is this. Within the context of what we're looking at, if you look at oil, CL, this is the continuous contract, I've only got leg C. And I suspect that oil is going to go a little higher. And that could, in fact, because of Chevron, Exxon, and other oils within the different indices, that could, in fact, hold the market up for a while longer. Because if crude oil is running, the market seems to love that. That's one of the reasons why there was a turnaround today, I think, that crude oil helped. So I'm saying that the answer is, I usually get emails about crude oil, and the answer is, I believe, based on my work, that there should still be a leg D in crude oil. 46.56 will be the very strong resistance. It's 45.55 right now, 55.56. I think it's got another point to go. And then it might need a little bit of a rest. Let me look at the 120-minute chart. That's peak. Let me do it for you live. There's the lowest, most obvious low bar. There are people that use this technique all the time, Chapman wave methodology. And there we go, A, B, C, D, E, and that's an F. Now, what is that? Yep, that's an A, F/B. So in essence, what we've got is the MACD's pullback, but still quite good. Stochastics at 83%, that is good. There's enough energy left here to have a rectangle formation with slightly higher highs. That says, yep, crude oil could get to the 46s. So I hope that, and at that point, I don't know if it's going to pull back, but I'm just saying that based on what we're looking at, that's kind of the area. Now, there's this candle, ugly candle of the 11th of December, 47.32 to 42.33, 4 points down. That candle says that the high of 47.32, that's probably, if I put a left side, right side price time match, could go to next week. Yeah, it could go to next week. So I'm going to do this right here to there, to that. Oh, it goes even further than that. Okay. All right. Well, what it's saying is, based on this, you've got a couple of weeks, in fact. You can do it beforehand, but you've got all the way until mid-June to be able to get to that 47. You could do it in a day and a half. Normally I would do to the bottom, but you can see that that's silly because you've already passed that level. And then I would choose the smallest doji type candle, and there isn't. So all I can say is that that's extending it out. Crude oil still looking quite good. I shouldn't say quite good. It's looking very good based on the weekly chart. You've got a Chapman wave squash almost in the MACD stochastic, and that says, yeah, you might get to the 47s a lot quicker. We'll see. Okay. So I wanted to do that. Then I wanted to do this. There are a couple of questions in the den. Basil, why not buy GE here? Any reasons? Yeah, for my opening call, one of the reasons is we use it so well as an indicator. I've used it for 20 years or something as an indicator. I found that when I was trying to buy it, and I did buy it, I was losing my focus a little bit on the actual trade. So that's the only reason. But if you're looking at GE, this candle is the best candle it's had in a long time. So my answer to you is, if the market is going to really turn down, GE will turn down. But as a risk reward, if you want to buy at 31.20, just as a short-term trade, I would just see 30.90 would be my stop, 30 cents. Because if it's going to do it, it's going to go right into Monday and take out that peak C on the left, 31.35. So I hope that resolves that. But the weekly chart, I have to wait for Friday to talk about the weekly. Maybe tomorrow in my show I'll talk about it again. Remind me. Let's go to Charlie in Framingham. Charlie, how are you?
Good morning, Basil. Charlie. I am looking, or I'm in DGAZ.
So that's the inverse, 3 times inverse natural gas ETB, and that's on the long side.
No, I think I'm on, I think D means down.
Oh, okay. Oh, D means down. I was just going to say, I haven't done any work on this, and I thought I had already done it. UG, let me just see UG to see if I've actually done that. There it is. It went to a peak E. Oh, thank goodness. Yeah, thanks for reminding me about that. Let me just finish here. This is a D, and it's going to an E, and then it makes a top, and I put in a down arrow because the stochastic pulled back sharply. You know, the MACD is still positive. Ooh, okay. So let me just, if you don't mind, I'm going to just look at the natural gas continuous contract. Oh, I haven't updated this. This is unusual. Oh, I have updated it. It just keeps getting covered because it gets smoothed out. So this is A, B, C, peak D. Oh, Charlie, how did you know to buy this?
Well, I bought it a couple of days ago. I don't know. I just liked what I saw.
You know, I admire, I want to talk a little bit about that. Can you hold on?
Yes.
Great. We've got Charlie in Framingham who did a beautiful trade here. He's got the short side of gas. I want to talk about that because he did a beautiful, that was great. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back with Charlie in Framingham, Mass, and we're looking at DGAZ. DGAZ made a tough D, and then the stochastic turned around from being I think it was in the single digits, and now it's at 25%, and the MACD hasn't crossed positive yet, but it is very close, and it is a leg A up in the daily chart. So you were obviously watching natural gas, and you watched this very closely, but what made you decide that you would switch from thinking of the long side to the short side?
I honestly don't know. I mean, it just happened the other day. I'm on a run.
Okay.
Everything good is happening. You know, it's like the Midas touch, and I don't want to jinx myself.
Okay. I'm not going to jinx you at all. I don't want you even to think about it. What I'm going to say to you is, so are you in at about 1550?
Now, let's see. What did I get it at? I got it at 1616.
Okay, so if it's at 1616, 1636 is the 9-period exponential moving average. But I'm going to base this, if you don't mind, I'm going to go back to my original chart of NG, the continuous contract. What this is saying, based on the 120-minute chart, is that it's very close to at least a little bit of a bounce, going from 2.093 to maybe 2.120. So that means that at this particular point, you've got a little bit of a risk of a bounce. But the most important aspect about it is that the stochastic is down at 57%, and the moving average convergence divergence that I look at has just today, right as we're speaking, the day's young, anything can happen, but it has crossed negative. If the MACD actually crosses negative and makes a wide beta, that is the wide distance between the green line, the faster moving average, and the slow line, that would say to me that there's a good chance that it could test the low of 1.996. That's the low of the 18th of April. So let me put that into context of the DGAZ, and that says that the high, okay, so that says that the low of the 18th is 20.88. So somewhere in that area would be a target, but I would like to see that natural gas closes towards the low of the day. If it gaps down tomorrow morning, you'll get another gap to the upside. I don't know how much you've got as a position. I'd be inclined to take something off. If you can get one more pop to the upside, I would take something off, and I'll tell you why. I don't have to tell you how volatile this instrument is, right?
That's why I'm calling.
Right. So there are two things that you could do. If you're a little worried about keeping these gains, and you are playing the triples, and I have to tell you, you have to think completely differently with the triples. The triples are really quick because of the multiplication aspect intraday, let alone when it closes in the evening and it gets reconfigured. So let me just do two things here. You don't have to do this. It's only a suggestion. And I'm going to say to you, you've had a really good gain in this instrument. So you might want, if you've got enough, you might be thinking maybe 1/3 you take off now. If it pops up tomorrow, you take off another third, and then you just let the other third run. And the reason why I'm doing it in the thirds is because this gap, you just never know with gaps. Sometimes it fills the gap. Sometimes it doesn't fill. Majority of the time, they don't just fill gaps. They kind of work their way into the gap, then they pull back, and then maybe the next day it will be filling the gap. What's really important is that if this gap's at any point and the gap's over 19.14, you have an island reversal, which says, whoa, natural gas will be coming down a lot more. So that's why I'm saying for money management, if you had just a one-to-one relationship, I'd say, that's fine. You could put a stop on some of it at maybe 16.36, but this is 3 times. So I really want to say to you, just money management's the most important. I don't want to jinx you anything. You've done a fabulous job. My only suggestion is, with a move as quick as this, maybe you want to just lighten up a little bit so that you've got the money in hand. You say, that's my profit. Now I've got a little bit of a leeway, a little wiggle room. If it pulls back tomorrow, maybe gaps up on Monday, that's the DGAZ, then you're in a really nice position. And you could even think of putting that little bit that you take off back if it hits 16.50 with a 15-cent stop, a very tight stop. So I'm just saying manage the trade, because we know how quickly these things can move. That's the only thing. But you timed it perfectly, whatever technique you use. I don't want to interfere with your trade. In other words, I don't want to say, get out now. I think it looks good. I think if it closes towards the 1750s today, that'll be really good for you. So congratulations.
Okay. Thank you, Basil.
And
you.
all I can
Make
say
it a
is,
good one.
I would just say to you, if you still have some left and it gets into the candle of the 18th between 1914 and 20.88, I would see if it can break to the top side. I wouldn't hold the whole position, but I just to see if it breaks to the upside, you've got a gain that is just a bonus for whatever you've done. And then you might even be able to hold it longer. To hold these longer sometimes is a very choppy ride. And so far, it's been straight up moves. So you got to be ready for a little bit of a pullback. Hey, nice pick.
Yeah, my mindset at this point is I've got a 7% profit, and it's just in a couple of days. So it's almost just be a guerrilla trader.
I don't think there's anything wrong with that. You just heard Scott. He's done that for months. He's been doing that with these particular stocks. A big position. He gets his point and a half. He's done. And then he waits for the next pullback. So, yeah, I think you're absolutely right. It is moving nicely now. So let's watch it. But you're in. I would try to keep a little bit because I think it's still looking good. That's all.
Okay, then. Thank you very much. I appreciate your help always.
Congratulations, Charlie. Have a great weekend.
Thank you. You too.
So,
Bye.
folks, we were looking at natural gas. So this is what's happened now with so many things. See, look, NG made that peak D-top, second peak D-top, pulls back sharply. There's a trend line. I didn't draw it in because I didn't want to actually mess around with Charlie's trade itself, because he really planned it and did it beautifully. I don't know what technique he used, but it definitely was. You see, you've got yourself a channel, and it's getting real close to the channel, which means that 2.059 in natural gas would be some kind of support. And I could draw in the Chapman wave inside track. Look, there it is, inside track. We're just touching it now. So this is the area where I would expect you'd get some kind of a bounce. If it plunges right through, this is going much lower. So that's the way I'd be looking at it. Now, let's just go back to a couple of things that I wanted to do here. I wanted to look at the volatility index. Remember, I've said, trying to make it easy. If the volatility index starts to get into the 15s, you're going to be starting to see selling pressure. And if it's under 15, you're seeing buying pressure. Where is it now? 13.38. And earlier this morning was up in the 14.80s. And then when the market opened, it actually jumped to 15.02. And now it's down 2.76%. Actually, no, from the high, it's even more. And it's gone from 15 to 13.39. That's almost a 2-point decline. So that, to me, one of the reasons why I wanted to not be extraordinarily short right now, but I wanted to be short and selectively short. But I've been wanting to add to the long side, and we added over the last couple of days. We've added financial. It's doing quite nicely. It's up. We've done a number of things, and I'll talk about that when we get back, because I really think that if you treat this as a bifurcated market, a split personality market, selectivity is absolutely imperative. I'll be right back. Basil Chapman, Dow's down 23, S&P's up 2.8.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. A couple of quick things I want to do before we wrap up. Question is, could you show us your yield chart? Thanks. So here's the yield chart. You see, this is going to be very interesting. This is the white is the 30-year yield, the TYX, and it is rallying, and it is just the high of 27.57 was the high of the week of the 11th of November. So far this week, we've gone to 27.64. So that has to be considered a leg C. But I still think that it's more the M-shaped pattern that we're looking at. However, it is a C, and it is a new recovery high. I'll put that in right there. So I think that's what you want to look at. But let me also mention that the 10-year hasn't made a new higher recovery high, and the 5-year is way low at 13.34. It has to go all the way to the over 15. So this is just next week will be really critical for bonds. That's my thinking. but it's going to be really critical for a whole bunch of other things as well. So I hope that satisfies the question there. The next one that I got was FXY is because the dollar is pulling back. The FXY has had a huge gap to the upside. It's at 89.17. This is the currency shares Japanese yen. The way I wouldn't have expected it from the way that it pulled back, but this big gap to the upside, breaking all the, I mean, it's even above that little arch H high, says that if the dollar does pull back further, the yen should, in fact, try its best to test the 89.85 level, the FXY, that is. If it breaks it, that starts a new leg E to the upside, a little sooner than I expected. But that monthly chart looks like silver. So the commodities and the other aspects that are going against the dollar. Look at the dollar, DXY. DXY right now it's had a successful test of the left side low of 93.63. It went to 93.68. It's only 3 cents high, but it is higher. So in this, I'll talk this tomorrow's Technical Friday. Let's see what happens. I'll talk about, remind me tomorrow. We'll spend some time on the dollar. It's now very important to be looking at the dollar, especially since some of the material stocks are doing well, but some of the commodities are just about to get to something toppy over here. So I did that, that question. First quarter GDP, okay. Oh, question on silver. Did I just do silver? I thought I did silver. Silver's doing yes, I did it. I think I typed it into the deck. Silver at 17.595. I think silver's trying to tackle the 17.769 high of the 21st in the continuous contract. That'll start leg E. But if it's on Monday and not tomorrow, that starts leg E in the weekly. If it's tomorrow, it just extends leg D. But most importantly, it's just about to bump into the 200-period exponential moving average resistance in the monthly chart of the continuous silver contract. If it closes above that, it's the first time it's been above it since it broke down back in September of last year. So silver's acting really well. The MACD and stochastic, I'll do that tomorrow as well because I'd like to see where it closes today and where it opens tomorrow. So let's just do this real quickly. You got a tiny little pullback and then it went even higher in the ESM 16. Look, I thought this is still leg F and it's made almost a full recovery. Now it could have the pullback. I have to actually raise that to the 9-period moving average. That was my level before. So if it does pull back at 2091, watch the whole 2090 to 2087 area. Big effort to get there, but it's spectacular. Now, just as we're about to wrap up, I just want to say the rotational strength. Let me go back to this chart. Did I actually do this chart? Yeah, this chart is going to be tomorrow's Technical Friday. We'll spend a lot more time on this chart. This chart is still relevant. It's not irrelevant until you take out the high of 18,167 on the Dow. So have a great day. I'll see you tomorrow. And, fascinating close tomorrow because we want to see what worked in the rotational strength today and why did the NASDAQ come back quite so strongly. It wasn't as faithful. I'll be back tomorrow. Have a wonderful day. Stay tuned for your swimming lessons and all the great shows coming up today. Until then.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.